Lesson 7 Charges. Lesson 7. Charges Companies Act, 2013. Relevant sections. 77. 87 Relevant rules. Companies Registration of Charges Rules, 2014 Key Forms. CHG1, CHG2, CHG3, CHG4, CHG6, CHG8, CHG9. Definition and meaning of charge section 216. 1. A charge means an interest or lien created on the assets or property of a company movable or immovable as security for repayment of a debt. 2. Charge can be created by act of parties or operation of law. 3. Charge secures loans and protects creditors in case of default. 4. It includes mortgage, hypothecation, pledge, or lien on company property. 5. Every company must register a charge with ROC within the prescribed time. 6. Time limit. Within 30 days of creation can be extended up to 300 days with additional fees. 7. Form. CHG1 for creation or modification. 8. Fee. Varies by nominal share capital Rs. 200, 600. 9. Penalty. Company and officers liable up to 5 lakh rupees company and 50,000 rupees officer. 10. Case law. ICDS Limited vs. CIT 2007-10 SC 481. Held that charge creates only a security interest, not ownership. Types of charges. 1. Fixed specific charge. Created on definite, identifiable assets like land, building, or machinery. 2. Floating charge. Created on a class of assets that changes over time, like stock in trade. 3. Equitable charge. Created without formal transfer, by deposit of title deeds. 4. Crystallized charge. When floating charge becomes fixed on a specific asset. 5. Legal charge. Created by express words under statute or court order. 6. Voluntary charge. Created by company itself through contract. 7. Involuntary charge. Created by operation of law. 8. Case law. Re Yorkshire Woolcombers Association Limited 1903. Defined floating charge as a charge over fluctuating assets until crystallization. 9. Section reference. 77.1. Creation and registration. 10. Form. CHG1. Difference between fixed and floating charge. Basis. Fixed charge. Floating charge. Asset. On specific, identifiable assets. On fluctuating assets. Control. Company cannot deal without consent. Company free until crystallization. Registration. Mandatory. Mandatory. Crystallization. Does not apply. Converts into fixed charge. Case law. Re Spectrum Plus Limited 2005 clarified difference between fixed and floating charge. Crystallization of floating charge. 1. Floating charge becomes fixed crystallized when company goes into liquidation. Company ceases business. Default occurs and lender intervenes too. After crystallization, company cannot sell or dispose of assets without creditors' consent. 3. Charge attaches to assets existing at time of crystallization. 4. Effectively turns into a fixed charge. 5. Case law. Re Panama, New Zealand and Australian Royal Mail County 1870. Explained that floating charge hovers over assets until it crystallizes. 6. Must be updated in ROC records. 7. Creditors, rights fixed at date of crystallization. 8. ROC must record modification form CHG1. 9. Registrar issues a certificate of modification CHG2. 10. Non-registration invalidates against liquidator or creditor. Difference between mortgage and charge. Mortgage. Charge. Transfer of interest. Only creates a right over property. Requires registration under Transfer of Property Act. Registration under Companies Act. Ownership interest. No ownership transferred. Case law. Narandas Carsandas vs. S.A. Camtam 19773 SC 247. Mortgage creates a real interest in property, charge does not. Difference between charge and pledge. Basis. Charge. Pledge. Possession. Not transferred. Transferred to lender. Security. On a movable or movable assets. Only movable goods. Registration. Mandatory with ROC. Not required. Case law. Lawan Prasad vs. Ramat Ali 1967. Clarified that pledge requires delivery of possession. Registration of charges section 77. 1. Every company must register charge within 30 days of creation. 2. Form CHG1 creation modification, CHG9 for debentures. 3. Registrar may allow registration within 300 days with additional fees. 4. After 300 days, company must seek central government condonation form CHG8. 5. Registrar issues certificate of registration CHG2. Conclusive proof of charge. 6. Charge must be signed by both company and charge holder. 7. Failure equals charge invalid against liquidator creditors but valid inter se parties. 8. Company must maintain a register of charges CHG7 at its registered office. 9. Delay beyond 300 days can be condoned by Regional Director RD. 10. Case law. Madura Coats Limited vs. Rock 2004. Delayed filing condoned due to bona fide error. Consequences of non-registration. 1. Charge becomes void against the liquidator and creditors. 2. Debt remains valid, but unsecured. 3. Fine. Company. Up to 500,000 rupees. Officers. Up to 50,000 rupees. 4. Lender may lose security priority. 5. ROC records remain unaffected. 6. Cannot enforce charge in insolvency proceedings. 7. Assets treated as free assets. 8. Registrar can initiate action under Section 86. 9. Company's financials will reflect unsecured loan. 10. No certificate CHG2 issued. Satisfaction of charge Section 82. 1. Company must inform ROC of satisfaction within 30 days. 2. ROC issues certificate of satisfaction CHG 5. 3. If not intimated within 30 days, can extend up to 300 days with additional fees. 4. ROC updates charge register. 5. Company must pass board resolution authorizing intimation. 6. Case law. State Bank of India vs. Gracia Pharmaceuticals 2014. Satisfaction not filed, charge remained on record even after repayment. 7. ROC may call for evidence of discharge. 8. Creditors, consent required if partial satisfaction. 9. After recording, property becomes free of encumbrance. 10. Inspection available to any member. Sample board resolution for creation of charge greater than resolve that pursuant to Section 77 of the Companies Act, 2013 and other applicable provisions, consent of the board be and is hereby accorded to create a charge on the company's immovable property situated at address in favor of bank name for securing loan of rupee amount under the sanction letter dated date. Greater than further resolve that name, designation be authorized to file e-form CHG1 with the ROC and to sign and execute all necessary documents in this regard. Important case laws quick recall. Case. Principle. Yorkshire Woolcombers 1903. Defined floating charge. ICDS Limited vs. CIT 2007. Charge is a security interest, not ownership. Re-Spectrum Plus 2005. Clarified distinction between fixed and floating charge. Narandas Carcendas 1977. Difference between mortgage and charge. SBIV, Gracia Pharmaceuticals 2014. Non-intimation keeps charge active. Madura Coates vs. Rock 2004. Condonation of delay in filing charge. Exam tips. 1. Always write sections plus forms plus timelines in answers. 2. Distinguish clearly between fixed versus floating, mortgage versus charge versus pledge. 3. Mention consequences of non-registration. High scoring area. 4. Quote Yorkshire Woolcombers for floating charge definition. Always fetches marks. 5. Learn form names CHG1 to CHG9. A favorite for MCQs. 6. If asked explain registration of charge procedure. Write stepwise, mention fees and condonation. 7. Remember. Charge void against liquidator and creditors if unregistered. 8. Attach a sample resolution and answers for 5 marked questions. 9. For long questions, start with definition right pointing arrow types right pointing arrow registration right pointing arrow satisfaction right pointing arrow case law flow. 10. Highlight timelines and penalties. Most crucial for professional exams. Lesson 8. Distribution of Profits Companies Act, 2013. Relevant sections. 123. 127 Relevant rules. Companies Declaration and Payment of Dividend Rules, 2014 Secretarial Standard. SS3 on Dividend. Profit and Ascertainment of Divisible Profit. 1. Divisible profits are profits legally available for distribution as dividend. 2. Only realized profits and notional or capital profits can be distributed if properly realized. 3. Section 123(1) permits dividend only from a current year's profit after depreciation. B. Past undistributed profits, or C. Money provided by government in pursuance of a guarantee. 4. Depreciation must be provided as per Schedule 2 before declaring dividend. 5. Unrealized gains, revaluation profits, or capital reserves cannot be distributed. 6. Misuse or illegal declaration can lead to imprisonment up to 2 years plus fine 1 lakh rupees. 5 lakh rupees Sec. 127. 7. Auditor certifies that profits are true and fair. 8. Case law. Spanish Prospecting Company, Limited, 1911. Profits can only be distributed if realized and bona fide available. 9. Transfer to reserves before distribution as per Rule 3. 10. Exam tip. Always state profit right pointing arrow depreciation right pointing arrow reserve transfer right pointing arrow dividend. Declaration and payment of dividend Section 123. 1. Dividend must be declared only at the annual general meeting AGM on recommendation of the board. 2. Board may declare interim dividend anytime during the financial year. 3. Dividend to be paid within 30 days of declaration. 4. Must be paid out of profits of the company, previous profits, or government-provided funds. 5. Depreciation must be provided as per Schedule 2 before any declaration. 6. Company must open a separate dividend account in a scheduled bank within 5 days of declaration. 7. Failure attracts interest at 18% P.A. and officer imprisonment. 8. Case law. J. Dalmia vs. CIT 1964. Dividend is distribution of profits to shareholders. Not a deductible expense. 9. Declaration once made cannot be revoked. 10. Form. None. But dividend details filed in financial statements AOC 4. Interest versus dividend. Basis. Interest. Dividend. Nature. Expense. Appropriation of profit. Payable to creditors, debenture holders, shareholders. Fixed or variable. Fixed. Depends on profits. Tax treatment. Deductible expense. Not deductible. Case law. J. Dalmia vs. CIT. Dividend is post-profit appropriation, not cost. Types of companies and provisions for dividend. 1. Private company. Can declare dividend as per its articles. 2. Public company. Must comply with Section 123 and Rules 3. 6. 3. Nitty company. Dividend cap of 25% unless approved by government. 4. Government company. Governed by departmental guidelines. 5. Section 8 company. Cannot declare dividend. Must reinvest profits. 6. Listed company. Must follow SEBI LODR regulations for record dates and disclosure. 7. Case law. CITV, Gwalior Rayon Silk MFG. Co. 1992. Profit distribution governed strictly by statute. 8. Exam tip. Remember private-public Section 8 distinctions. Types of dividend. 1. Interim dividend. Declared by board between 2 AGMs. 2. Final dividend. Declared at AGM after board's recommendation. 3. Special dividend. Declared on extraordinary profits or sale of assets. 4. Bonus dividend. From capitalized reserves not cash. 5. Stock dividend. Issued in form of shares bonus issue. 6. Cash dividend. Usual type, paid in cash or bank transfer. 7. Case law. Brook Bond India Limited vs. CIT 1986. Interim dividend can be revoked before payment. Final cannot. 8. Exam tip. Mention time and authority for each dividend type. Power to declare dividend. 1. Final dividend declared by shareholders at AGM, based on board recommendation. 2. Shareholders cannot increase dividend rate beyond what board recommends. 3. Board may declare interim dividend anytime from surplus or profits. 4. Articles of Association govern procedure. 5. Resolution recorded in minutes book. 6. Case law. Bogat vs. Dalmia Cement Limited. 1955. Shareholders cannot enhance dividend beyond board's proposal. 7. Dividend declaration equals fiduciary act of directors. 8. Violations punishable under Sec. 127. 9. Dividend once declared equals debt due from company. 10. Payment must be made within 30 days of declaration. Source of payment of dividend. 1. A profits of current year after depreciation. 2. B previous undistributed profits. 3. C government funds if guaranteed. 4. No dividend can be declared out of capital or capital profits unless realized. 5. Transfer to reserves. Up to 10% of profits as per company policy. 6. Dividend can be declared out of accumulated profits if no current profit. Rule 3.5. 7. Case law. Foster vs. New Trinidad Lake Asphalt Company. 1901. Dividend cannot be paid from capital. 8. Exam tip. Always write Section 123 plus Rule 3.5 in source of payment answers. Transfer of profits to reserve. 1. Optional after 2013. No mandatory percent to transfer. 2. Earlier 10% transfer Compulsory Companies Act, 1956. 3. Transfer strengthens company's financial position. 4. Board must recommend quantum to transfer. 5. If dividend declared out of past profits. Follow Rule 3.5 conditions. 6. Case law. Amalgamated Coalfields Limited vs. CIT 1961. Reserve transfer is appropriation, not expense. 7. Excess transfer can affect dividend paying capacity. 8. Disclosure required in financial statements. 9. Auditor must verify reserve movement. 10. Exam tip. Distinguish reserve versus provision. Dividend distribution policy for listed companies. 1. SEBI LODR Reg. 43A mandates listed entities to frame a dividend distribution policy. 2. Must include parameters, profits, reserves, growth, liquidity, etc. 3. Policy to be disclosed on company's website in an annual report. 4. Change requires board approval. 5. Non-compliance attracts SEBI penalty. 6. Exam tip. Mention Regulation 43A in short answers. Persons entitled to dividend. 1. Shareholders registered in the Register of Members on record date. 2. Beneficial owners as per Depository Records Section 89. 3. Legal representatives in case of deceased shareholder. 4. Joint holders. First named gets the right. 5. Transferee if transfer registered before record date. 6. Case law. Bakrishan Gupta vs. Swadeshi Polytechs Limited. 1985. Beneficial owner entitled to dividend. Unpaid dividend account Section 124. 1. Unpaid dividend to be transferred to unpaid dividend account within 7 days after expiry of 30 days from declaration. 2. Company must post details on website within 90 days. 3. Unpaid dividend lying for 7 years transferred to IEPF Investor Education and Protection Fund. 4. Shareholders can claim refund from IEPF within 7 years by filing Form IEPF 5. 5. Fine for default. Company. 5 lakh rupees. 25 lakh rupees. Officers. 1 lakh rupees. 5 lakh rupees 6. Case law. Assisi Bank Limited vs. Official Liquidator 2005. IEPF claim can't be time barred if genuine. 7. Maintain register of unpaid dividend Rule 5. 8. Separate bank account must be opened in scheduled bank. 9. Disclosure mandatory in board report. 10. Dividend unpaid for 7 years equals shares transferred to IEPF. Investor Education and Protection Fund IEPF Section 125. 1. Administered by MCA under Section 125. 2. Receives unpaid dividends, matured deposits, debentures, and interest after 7 years. 3. Form IEPF 1. Statement of amounts to be transferred. 4. Form IEPF 5. For claimant refund. 5. Form IEPF 2. Annual statement of unclaimed amounts. 6. Refund issued after verification by nodal officer. 7. Fund used for investor awareness and education. 8. Case law. MCAV, Nirma Limited. 2018. Delay in IEPF transfer penalized. 9. Exam tip. Always write 7 years plus IEPF 1 plus IEPF 5 timeline. Revocation of dividend. 1. Once declared, dividend cannot be revoked except due to illegality or mistake. 2. Liability arises as soon as declaration made. 3. Case law. Jalan Trading Company vs. Mil Mazdor Sabah 1966. Declaration creates enforceable debt. 4. Interim dividend can be revoked if company's financial position deteriorates. 5. Revocation without authority equals officer liability under Section 127. Secretarial Standard on Dividend SS3. 1. SS3 issued by ICSI and mandatory under Section 118(10). 2. Covers declaration, payment, interim final dividend, unpaid dividend, disclosures. 3. Prescribes timelines. Bank account within 5 days. Payment within 30 days. Transfer to unpaid dividend account after 30 plus 7 days. 4. Requires board resolution and proper disclosure. 5. Ensures corporate governance in dividend decisions. 6. Non-compliance equals violation under Section 118(11). Sample board resolution for declaration of dividend. Greater than resolved that a final dividend of 10 rupees per equity share of 10 rupees each, i.e. 100% be and is hereby recommended for the financial year ending the 31st of March 2025, subject to approval of members at the annual general meeting. Greater than resolved further that the company secretary be authorized to open a separate dividend account and ensure compliance under Section 123 and SS3. Important case laws. Quick reference. Case. Principal. Re Spanish Prospecting Company, 1911. Only realized profits can be distributed. Brook Bond India Limited vs. CIT 1986. Interim dividend revocable before payment. Foster vs. New Trinidad Asphalt 1901. Dividend cannot be paid out of capital. Bhagat vs. Dalmia Cement Limited, 1955. Shareholders can't increase dividend beyond board's recommendation. Bakrishan Gupta vs. Swadeshi Polytechs Limited, 1985. Beneficial owner entitled to dividend. Assisi Bank Limited vs. Official Liquidator 2005. IEPF claims valid even if delayed. Exam tips. 1. Always mention sections 123. 127 with timeline and keywords 30 days, 7 years, IEPF. 2. No form names. IEPF 1, 2, 5. 3. Common 5 mark topics. Unpaid dividend and IEPF. Sources of dividend. Interim versus final dividend 4. For long answers, right. Definition right pointing arrow process right pointing arrow timelines right pointing arrow case law right pointing arrow penalty. 5. Mention SS3 compliance for bonus marks. 6. Always distinguish capital profits and revenue profits. 7. Quote re Spanish prospecting for safe marks. 8. Don't forget to write dividend once declared equals debt owed to shareholders. Lesson 9. Accounts and Auditors. 1. Books of Accounts Sec. 128. Key points. 1. Every company must maintain true and fair view of its affairs. 2. Must be kept on accrual basis and according to the double entry system. 3. Books to be kept at registered office. Can be shifted with board resolution plus intimation to ROC within 7 days. Form AOC 5. 4. To include records of assets, liabilities, sales, purchases, income, and expenses. 5. Penalty. Company. 50,000 rupees to 500,000 rupees. Officer. Imprisonment up to 1 year or fine 50,000 rupees. 500,000 rupees. Case law. Right arrow State of Gujarat vs. Shantilal Mangaldas 1969. Books must be reliable and reflect true and fair view. Non-maintenance leads to penal consequences. Exam tip. Always link section 128 with AOC 5 and double entry, accrual basis. 2. Place and maintenance including electronic form. Key points. 1. Books can be kept in electronic mode compliant with Rule 3 of Companies Accounts Rules, 2014. 2. Must remain accessible in India for inspection by directors. 3. Backup to be kept on servers located in India. 4. Authentication through digital signature. Case law. Right arrow Infosys Limited. Case 2017. Validated use of cloud-based accounting. Digital access equals books of account. 3. Books in respect of branch office. Key points. 1. Branch office to maintain separate books. 2. Summarized returns to be sent to head office monthly or at intervals decided by board. 3. Consolidation required at year end. 4. Preservation of books. Key points. 1. 8 years preceding current financial year Rule 3.5. 2. Can be kept in physical or electronic form. 5. Financial Statements Sec. 129. Key points. 1. Must give true and fair view and comply with Schedule 3 in accounting standards. 2. To include balance sheet, P&L, cash flow for all, statement of changes in equity for listed. 3. Board's report to accompany it Sec. 134. Penalty. Company. 300,000 rupees. Officer. Imprisonment up to 6 months or fine 50,000 rupees. 500,000 rupees. Case law. Right arrow Re. National Rayon Corporation Limited. 1955. Balance sheet must fairly disclose company's financial position. 6. Consolidated Financial Statements CFS. Key points. 1. Mandatory for holding company having subsidiaries associates joint ventures. 2. Prepared in same form and manner as parent accounts. 3. To include notes on subsidiaries' performance. 4. Non-compliance equals penalty same as Sec. 129. 7. Reopening and revision of accounts Sec. 130. 131. Key points. 1. Can be reopened only by court tribunal order for fraud or mismanagement. 2. Voluntary revision allowed within 3 years from filing date, after approval of NCLT. 3. Revised statements to be filed with revised board's report. Case law. Right arrow ICAIV. Mukesh D. Joshi 2011. Fraudulent manipulation of accounts justified. Reopening by tribunal. 8. National Financial Reporting Authority NFRA Sec. 132. Key points. 1. NFRA regulates accounting and auditing standards. 2. Investigates auditors of listed and large unlisted public companies. 3. Power to impose penalty. Individual 1 lakh rupees. 25 lakh rupees. Firm 10 lakh rupees. 5 times fees received. 4. Can debar auditor for up to 10 years. Case law. Right arrow NFRA v. Deloitte Haskins and Sells 2020. Auditor debarred for 5 years for IL&FS. Misreporting. 9. Appointment of auditors Sec. 139. Key points. 1. First auditor. Appointed by board within 30 days of incorporation. If not, shareholders appoint within 90 days. 2. Subsequent auditor. Appointed in AGM for 5 years. 3. Form ADT1 to be filed within 15 days of appointment. 4. Rotation Sec. 139-2. Listed in big companies. Individual 5 years, firm 10 years. 5. Penalty. 25,000 rupees. 5 lakh rupees if default continues. Case law. Right arrow Deloitte vs. NFRA 2022. Confirmed that auditor rotation is non-negotiable under Section 139-2. 10. Removal and resignation of auditor Sec. 140. Key points. 1. Removal before expiry right pointing arrow approval of central government plus SR. 2. Auditor resigning must file Form ADT3 within 30 days. 3. Failure equals 50,000 rupees fine. 11. Disqualification Sec. 141. Key points. 1. Body corporate other than LLP can't be auditor. 2. Relatives, shareholding less than 1% of paid up capital. 3. Indebtedness is less than or equal to 5 lakh rupees. 4. Business relationship disallowed. 5. Violation equals disqualification for that term. 12. Rights and duties of auditor Sec. 143. Key points. 1. Right to access all books and information. 2. Duty to report fraud to central government within 30 days Form ADT 4. 3. Must sign audit report and indicate observations clearly. 4. Penalty. 1 lakh rupees. 25 lakh rupees for misreporting. Case law. Right arrow re Kingston Cotton Mill Company. 1896. Auditor is a watchdog, not a bloodhound. Must use reasonable skill. 13. Special audits. Cost audit Sec. 148. For prescribed companies manufacturing, pharma, etc. Auditor to submit cost audit report to board within 180 days. Secretarial audit Sec. 204. For listed and large companies. Conducted by PCs. Internal audit Sec. 138. For prescribed classes. Internal auditor can be CA, cost accountant, or other professional. Specimen resolution. Appointment of auditor. Greater than resolve that MSXYZ in company. Chartered accountants firm REIN. No. 012345C, be and are hereby appointed as statutory auditors of the company under Section 139 of the Companies Act, 2013, to hold office till the conclusion of the next AGM at a remuneration fixed by the board. Key case laws for Lesson 9. Case. Principle. Re Kingston Cotton Mill Company. 1896. Defines auditor's duty. Reasonable care, not suspicion. NFRA v. Deloitte 2020. Auditor debarment justified for gross negligence. Re National Rayon Corp. 1955. Financial statements must fairly disclose condition. ICAI v. Mukesh Joshi 2011. Tribunal may reopen fraudulent accounts. Exam tips. Always quote sections 128, 129, 130, 132, 139, 140, 141, 143. Revise forms AOC 5, ADT 1, ADT 3, ADT 4. Remember rotation and penalty structure. Link NFRA right pointing arrow auditor oversight and disciplinary powers. 4 keywords for exam. True and fair view, double entry, accrual basis, rotation policy. Prepare 2. 3 specimen resolutions auditor appointment, resignation, NFRA compliance. 15. Signing of financial statement Sec. 134. Must be approved by board before signing. Signed by chairperson or 2 directors. 1 must be MD and CFO plus CS if available. Board's report to be signed separately. Failure right pointing arrow fine 3 rupees. 25 lakh for company and 50,000 rupees. 5 lakh rupees for officers. 16. 19. Listed company, subsidiary, inspection, filing Secs. 136. 137. Listed companies must place financials on their website and send e-copies to members. Subsidiaries' financials to be attached to holding company statement. Every financial statement must be filed with ROC and Form AOC 4 within 30 days of AGM. Delay. Penalty 100 rupees per day, max 10 lakh rupees company plus 1 lakh rupees officer. Members and creditors have right to inspect books during business hours. 25. 26. Accounting standards signed as. Central government issues standards per Sec. 133 in consultation with NFRA and ICAI. IND AS are mandatory for listed and certain threshold unlisted companies. Objective. Uniformity, transparency, comparability. 29. 33. Government company reappointment vacancy tribunal powers. Government companies. Auditor appointed by C and AG Sec. 139.5. Casual vacancy. By resignation right pointing arrow filled by members within 3 months. Otherwise right pointing arrow by board within 30 days. Tribunal powers Sec. 1405. NCLT can remove auditor for fraud after hearing. 38. 40. Audit report in CARO 2020. Auditor must report on accounts as per Sec. 143.3. CARO 2020 Companies Auditors Report Order. Additional statements for statutory audit of specified companies e.g. fixed assets, loans, frauds, defaults. Not applicable to small private unlisted less than turnover 1 crore rupees. 41. 45. Cost, Secretarial and Internal Audit. Already included earlier, but here's the regulatory precision. Cost Audit Sec. 148 Right pointing arrow Industries notified by CG. Cost report to be filed within 30 days to CG Form CRA4. Secretarial Audit Sec. 204 Right pointing arrow mandatory for listed and large public companies greater than 50 crore rupees paid up. Internal Audit Sec. 138 Right pointing arrow mandatory for prescribed classes Rule 13, Companies Accounts Rules, 2014. Sample resolution for appointment of cost auditor. Greater than resolved that pursuant to Section 148 of the Companies Act, 2013 and Rule 14 of the Companies Audit and Auditors Rules, 2014, MSABC cost accountants be and are hereby appointed as cost auditors of the company for the financial year 2025. 26 at a remuneration of rupee ___ is recommended by the Audit Committee. Short reference table. Key forms. Purpose. Form. Time limit. Change of books location. AOC 5. 7 days. Filing of financial statement. AOC 4. 30 days from AGM. Auditor appointment. ADT 1. 15 days. Auditor resignation. ADT 3. 30 days. Report of fraud. ADT 4. 30 days. Cost audit report. CRA 4. 30 days. Secretarial audit. MR 3. With board report. Exam strategy. 1. Always write section numbers plus corresponding forms. 2. Prepare at least 3. 4 case laws Kingston Cotton Mill, NFRA vs Deloitte, ICAI vs Mukesh Joshi. 3. Revise penalty structures and timelines. This is a frequent MCQ short note area. 4. No differences. Internal versus statutory versus cost versus secretarial audit. 5. CARO 2020 features are favorite for descriptive cues. 6. Expected 10-mark question. Discuss role and powers of NFRA or explain procedure for appointment and removal of auditors. Lesson 10. Compromise, Arrangement and Amalgamation. Sections 230. 240, Companies Act, 2013. 1. Introduction Sec. 230. 240. 1. Deals with reorganization of company structure. Mergers, amalgamations, takeovers, compromises, etc. 2. Governed by Chapter 15 of Companies Act, 2013. 3. Objective. Ensure smooth restructuring while protecting shareholders and creditors. 4. NCLT National Company Law Tribunal is the approving authority. 5. Scheme equals proposal for compromise or arrangement between company and its members' creditors. 6. Compromise equals settlement of disputes. Arrangement equals includes restructuring, mergers, demergers. 7. Applicable to all companies including foreign companies having Indian business. 8. Administered by MCA and NCLT Rules, 2016. 2. Power to compromise or make arrangements with members or creditors Sec. 230. 1. Application to NCLT by company creditor member liquidator in case of winding up. 2. NCLT may order meeting of creditors or members. 3. Scheme must disclose all material facts including auditor's report, pendency of investigations. 4. Notice must include copy of scheme, valuation report, effects on KMPs, promoters, etc. 5. Approval needed by majority representing 3/4 in value of creditors or members present and voting. 6. Sanction by NCLT makes scheme binding on all. 7. NCLT must ensure scheme is not prejudicial to interests of members or public. 8. Filing with ROC within 30 days of order. Case law. Mahir H. Moffatwell vs. Moffatwell Industries Limited. 1996. SC held that court's role is supervisory. Not to substitute its decision for company's commercial wisdom. 3. Affidavit by applicant to disclose material facts. The applicant. Company creditor member must submit an affidavit revealing all material facts such as financial status, auditor's report, and any ongoing investigations. Non-disclosure may lead to rejection or penalties. 1. Mandatory under Rule 6 of CAA Rules, 2016. 2. Must include latest financial position, auditor's report, any pending investigations proceedings. 3. Filed along with application under Section 230. 4. Concealment equals rejection of application plus possible penalty under Sec. 447 fraud. 4. Notice of the meeting. NCLT directs the issue of notice to all stakeholders, along with scheme details, valuation report, and explanatory statement. It must be published in newspapers and sent at least 21 days before the meeting. 1. Sent to all creditors, members, debenture holders, SEBI, CCI, ROC, official liquidator, etc. 2. Notice in Form CAA 2, at least 21 clear days before meeting. 3. Must include copy of scheme, explanatory statement, valuation report, etc. 4. Publication. 1 in English newspaper plus 1 in vernacular. 5. May be sent electronically if consented. 5. Notice to provide for voting self-proxy postal ballot electronic voting. Members or creditors can vote personally, through proxy, postal ballot, or electronically. The chairman records and reports the voting results to NCLT for final consideration. 1. Section 108 and 230 read together. 2. Members and creditors can vote. In person. By proxy. Through postal ballot. Electronically. 3. Proxy must be in writing and deposited 48 hours before meeting. 4. Chairman submits report of meeting to NCLT within 3 days. 6. Voting. Approval requires both a majority in number and 3/4 in value of those voting. Scrutinizer's report and results must be filed with the tribunal to move toward sanction. 1. Scheme approved by majority in number representing 3/4 in value. 2. Voting may be by poll, show of hands, or electronic. 3. Scrutinizer's report filed with NCLT. 4. Result to be published on company website and notified to stock exchanges. 7. Approval and sanction of scheme Sec. 236. Once approved by members' creditors, NCLT sanctions the scheme, making it legally binding. The order must be filed with the ROC within 30 days of receipt. 1. NCLT sanction makes scheme binding on company, creditors, and members. 2. Copy of order filed with ROC within 30 days. 3. Sanction order must specify date of effect. 4. NCLT may modify scheme in public interest. Case law, Sesa Industries Limited vs. Krishna H. Bajaj 2011. Scheme must be fair and not against minority interest. 8. Accounting treatment to conform with accounting standards. 1. Scheme's accounting treatment must comply with accounting standards assigned as. 2. Company's auditor must certify compliance. 3. Non-compliance equals rejection of scheme by NCLT. 9. Tribunal may dispense with meeting of creditors. If 90% of creditors in value give written consent, NCLT may waive the meeting requirement to save time and cost. 1. NCLT may dispense with creditors, meeting if 90% in value consent in writing. 2. Filed with NCLT along with application. 10. Compromise includes takeover. Takeovers under Section 230(11) are considered a form of compromise. A company can acquire control by making a fair offer to shareholders, supported by a valuation report. 1. Takeover equals acquisition of controlling interest in company. 2. Takeover under Section 230(11) requires offer to shareholders. 3. Rules framed under companies' compromises, arrangements and amalgamations rules, 2016 govern process. 4. Valuation report mandatory. 11. Application to tribunal by aggrieved party. If any party feels the scheme is not properly implemented or prejudicial, they may apply to NCLT. The tribunal may modify or enforce the scheme as justice demands. 1. If scheme is not implemented or violated, aggrieved party may approach NCLT. 2. NCLT may enforce scheme, give directions, or modify. 3. NCLT can even order winding up if scheme cannot be executed. Case law, Hindustan Lever Employees Union vs. Hindustan Lever Limited. 1995. Court held that merger should not be opposed merely on suspicion. Must show material irregularity. 12. Power of tribunal to enforce compromise or arrangement. 1. NCLT may supervise implementation and give necessary directions. 2. Power to modify, review, or terminate scheme. 3. Can punish officers for non-compliance. Fine 1 lakh rupees to 25 lakh rupees. 13. Merger and amalgamation of companies Sec. 232. Merger equals integration of two or more companies into one. The scheme must include transfer of assets, liabilities, and share exchange ratio, and requires NCLT sanction for legal effect. 1. Amalgamation equals merging two or more companies into one. 2. Scheme includes transfer of property, liabilities, share exchange ratio. 3. NCLT's order to be filed with ROC within 30 days. 4. Copy also filed with OL, IT Department and SEBI for listed cause. Case law, Re. PMP Auto Industries Limited. 1994. Sanctioned merger must be for genuine business purpose. 14. Tribunal's power to call meeting Sec. 231. NCLT has power to order and oversee meetings of members' creditors, fix quorum, appoint chairperson, and decide voting procedures. 1. Tribunal directs convening of meetings of creditors' members. 2. Notice must specify time, place, voting mode. 3. Chairman appointed by NCLT. 15. Sanctioning of scheme by Tribunal Sec. 232-3. 1. NCLT ensures compliance with accounting standards. Proper valuation of shares. No fraud or public interest harm. 2. Sanctioned scheme has same effect as an order of the court. 16. Merger and amalgamation of certain companies Sec. 233. Applies to small companies or holding and wholly owned subsidiaries. The merger is approved by boards, members 90%, and creditors 9/10 in value. Only central government approval is needed. No NCLT process unless objections arise. 1. Fast track merger available for 2 small companies, holding and wholly owned subsidiary. 2. Approval. Board right pointing arrow ROC and OL right pointing arrow shareholders 90% right pointing arrow creditors 9/10. 3. File form CAA 11 with ROC. 4. No NCLT approval required. Only central government confirmation. 5. If objection by ROCOL, then referred to NCLT. 17. Transferee company to file copy of scheme approved. 1. Filing with ROC and Form INC 28 within 30 days. 2. Copy also sent to Income Tax Department. 18. Application by central government to tribunal. 1. If merger prejudicial to public interest, CG may apply to NCLT within 60 days. 2. Tribunal may stay or modify scheme. 19. Effect of registration of scheme. 1. Transferor company dissolved automatically. 2. Assets and liabilities transferred to transferee. 3. Employees continue employment. 4. Legal proceedings continue as if transferee substituted. 20. Merger or amalgamation with a foreign company Sec. 234. 1. Allowed with prior approval of RBI. 2. Foreign company must be incorporated in jurisdictions notified by CG. 3. Consideration may be in cash, depository receipts, or shares. 4. Valuation certified by recognized valuers. 21. Power to acquire shares of dissenting shareholders Sec. 235. 1. When 90% shareholders approve, acquirer can buy remaining 10%. 2. Dissenting shareholders must be paid fair value. 3. Money transferred to separate bank account. 22. Purchase of minority shareholding Sec. 236 1. Acquirer or person acting in concert holding 90% or more may compulsorily acquire remaining shares. 2. Price determined by registered valuer. 3. Transfer to be completed within 60 days. 23. Amalgamation of companies in public interest Sec. 237. 1. CG may order amalgamation in public interest. 2. Draft order published and objections invited within 30 days. 3. Final order made after consultation with ROC and OL. 24. Majority rule and minority rights. 1. Rule in Foss vs. Harbottle 1843. Majority's decision prevails. 2. Exceptions. Fraud, oppression, or ultra vires acts. 3. Minority can seek relief under Sec. 241, 242, 25. Prevention of oppression and mismanagement Sec. 241, 246. 1. Available when affairs are oppressive prejudicial to members' public interest. 2. Application by 100 members or 1/10 of total whichever less. 1/10 of issued share capital 3. Tribunal may order regulation of conduct, removal of directors, or share purchase. Case law. Needle Industries vs. Needle Industries Nui India Limited. 1981. SC held that majority must act in good faith for company's benefit. 26. Application to Tribunal for relief. 1. Filed in Form NCLT-1 with supporting documents. 2. Tribunal must dispose within 90 days. 27. Power of Tribunal Sec. 242. 1. Can terminate modify agreements. Remove MD directors. Appoint new board. Restrict transfer of shares. 28. Class action suit Sec. 245. 1. Filed by members depositors on behalf of group. 2. Minimum 100 members or 5% of total. 3. Remedy against fraud, misstatement, or oppressive conduct. 4. Binding on company and its officers. 29. Liability of audit firm and partner Sec. 245-5. 1. Joint and several liability for misleading statements or wrongful acts. 2. Penalty. Imprisonment up to 10 years if fraud and fine up to 10 lakh rupees or 3 times profit. 30. Required number of applicants. Specifies the minimum threshold like 100 members or 10% of share capital required to initiate proceedings under oppression, mismanagement, or class action provisions. 1. Defined under Rule 84, NCLT rules. 2. Must represent minimum threshold prescribed. 31. Registration of documents. All NCLT orders or approved schemes must be filed with ROC within 30 days. Non-compliance invites daily fines of 500 rupees up to 1 lakh rupees. 1. All NCLT orders and approved schemes to be filed with ROC within 30 days Sec. 232-5. 2. Failure right pointing arrow penalty 1 lakh rupees plus 500 rupees per day. 32. Companies to furnish information or statistics Sec. 240. 1. CG may call for info from company or liquidator for effective implementation. 2. Failure right pointing arrow penalty 5 lakh rupees for company, 50,000 rupees for officers. Sample resolution board resolution for approval of scheme. Greater than resolved that pursuant to sections 230. 232 of the Companies Act, 2013 and other applicable provisions, the draft scheme of amalgamation between ABC Limited and XYZ Limited. Placed before the board, be and is hereby approved and submitted to the National Company Law Tribunal for sanction. Key case law summary. Case. Principal. Mahir H. Moffattl vs. Moffattl Industries 1996. Court's jurisdiction is supervisory, not to substitute commercial wisdom. Hindustan Lever Employees Union vs. HLL 1995. Merger valid if fair and for business benefit. Needle Industries vs. NIN India Limited. 1981. Minority rights protected against oppressive majority. Sesa Industries Limited vs. Krishna Bajaj 2011. Scheme must not harm minority shareholders. Re. PMP Auto Industries 1994. Genuine purpose must exist for amalgamation. Foss vs. Harbottle 1843. Majority rule principle. Exam tips. 1. Always quote section numbers in compromise and amalgamation vary scoring. 2. Write procedure plus authority plus time limit plus form for each. 3. Diagrammatically show process application right pointing arrow notice right pointing arrow meeting right pointing arrow sanction right pointing arrow ROC filing. 4. Expect 10 mark essay on fast track merger Sec. 233 or oppression and mismanagement. 5. 1 short note question always from class action Sec. 245. 6. Remember difference between compromise, arrangement, merger, takeover. 7. Always mention NCLT, ROC, and CG timelines. Lesson 11. Dormant Company Sections 455. 459. 1. Advantages of dormant companies under the Companies Act, 2013. 1. Allows companies to remain inactive legally without dissolving. 2. Minimizes compliance burden e.g. financial statements, annual returns. 3. Protects company name from being taken by other businesses. 4. Useful for holding companies or future projects. 5. Company can retain PAN, TAN, and other registrations. 6. Provides a legal framework to resume business later. 7. Reduces administrative and operational costs. 8. Helps avoid penalties for non-filing when no business activity occurs. 9. Maintains ownership rights over assets. 10. Ensures continuity of corporate existence without active operations. Exam tip. Focus on benefits versus winding up. Saving name, reducing compliance is a common question. 2. Compliance is for dormant company. 1. File Form MSC1 with ROC to obtain dormant status. 2. Must declare no significant accounting transactions except fees paid to ROC. 3. Annual filing of Form MSC4 to confirm inactivity. 4. Maintain minimum statutory registers members, directors. 5. Comply with income tax provisions. May need nil filings. 6. ROC may require periodic confirmation of dormant status. 7. Cannot issue new shares or accept deposits. 8. Must avoid business activity beyond permitted passive activity. 9. Default may attract penalty of 25,000 rupees. 100,000 rupees under Sec. 455. 10. Auditor not required if company remains inactive. Case law. Rajendra Prasad vs. ROC. The tribunal held that filing annual return is exempt for a dormant company unless it undertakes business. Shows importance of correct annual compliance. Exam tip. Always mention Form MSC1, MSC4, nil transactions as keywords. 3. Procedure to obtain the status of a dormant company. 1. Hold a board meeting approving the application for dormant status. 2. Pass a board resolution to make application to ROC. 3. File Form MSC1 with ROC along with fees 5,000 rupees. 10,000 rupees. 4. Attach affidavit stating no significant transactions in last 2 years. 5. ROC examines documents and issues certificate of dormant status. 6. Company is considered dormant from the date of certificate. 7. Maintain all statutory records even after dormant status. 8. Filing can be done online through MCA portal. 9. Fees depend on authorized capital, usually minimal. 10. Any significant transaction post-dormancy requires special approval. Sample resolution. Resolve that pursuant to Section 455 of Companies Act, 2013, the company to apply to the Registrar of Companies for obtaining the status of dormant company and the Managing Director is hereby authorized to sign and submit Form MSC1. Exam tip. Board resolution plus MSC1 filing equals main steps. 4. Prerequisites for obtaining the status of dormant company. 1. Company should not have carried out any business activities for at least 2 consecutive years. 2. Must have paid up share capital as per MCA norms. 3. Must not be under investigation or winding up. 4. Directors and members must authorize application via board resolution. 5. Should not hold active licenses that require operational activity. 6. Must ensure no liabilities outstanding, except statutory fees. 7. MCA 21 portal requires digital signatures for filing. 8. Name and registration details must be up to date. 9. Proper affidavit stating inactivity is mandatory. 10. ROC reserves the right to reject if criteria not met. Exam tip. 2 years inactive plus board resolution plus affidavit is often asked in MCQs or short notes. 5. Procedure to obtain the status of active company from dormant company. 1. Hold a board meeting to approve resumption of business. 2. Pass a board resolution and file Form MSC4 with ROC. 3. Ensure statutory dues and filings are up to date. 4. ROC issues certificate of active status after verification. 5. Start business activity only after receiving certificate. 6. Update financial records and resume annual filings Form AOC4, MGT 7. 7. Pay any penalty for non-compliance during dormancy if applicable. 8. Restore all licenses or registrations if business requires them. 9. Notify stakeholders and banks about status change. 10. Resumption can be challenged by ROC if non-compliance found. Case law. Sunrise Private Limited vs. ROC. Tribunal allowed reactivation after MSC4 filing. Emphasized no backdated business can be considered during dormancy. Exam tip. Short note often includes MSC4 plus board resolution plus ROC certificate. 6. Specimen resolutions. To apply for dormant status MSC1. Board resolution approving filing of Form MSC1. To resume active status MSC4. Board resolution approving filing of Form MSC4 to reactivate company. Key exam tips for dormant companies. 1. Forms. MSC1 dormant, MSC4 active. Always mention in exams. 2. Timeframe. Minimum 2 years inactivity before application. 3. Penalties. 25,000 rupees. 100,000 rupees for non-compliance. 4. Advantages. Reduce compliance, retain name, no annual audit. 5. Case law. Rajendra Prasad vs. ROC, Sunrise Private Limited vs. ROC. Highlight compliance and reactivation. 6. Always note board resolution plus affidavit plus ROC certificate steps.